Hi, welcome to this video. In today's video, we'll be talking about joint life insurance policy. Without any further introduction or blah blah blah, let's quickly dive right into what joint life insurance policy is. Quickly, an overview of joint life insurance policy. When one spouse or partner in a relationship dies before another, financial difficulties from loss of income are the last thing anyone wants to deal with. Life insurance can be used for life partners or spouses to ensure that their loved ones or other designated beneficiaries are financially protected should one or both of them pass away prematurely. Joint life insurance provides that protection for two people under one policy, which can be more cost effective in certain cases. However, joint life insurance carries the risk of leaving the surviving party uninsured if the other party dies. Joint life insurance policy is also increasingly difficult to find, especially as term life insurance premiums get more affordable almost every year. If you don't know about term life insurance policy, please check the video in the description. We have a video that explains everything you need to know about term life insurance policy and why its premiums are cheaper compared to other policies. So, while joint life insurance policies may be a viable option in certain situations, experts say it's usually not a good idea, and most experts recommend individual term policies instead. So, if you don't know more about term policy, please check the description below. You see that. So, what is joint life insurance policy? Typically, a life insurance policy applies to one person. Insurance policies like term life insurance policy or life insurance policy, they apply to a single person. In this case, a joint life insurance policy, however, covers two individuals. Like an individual life insurance policy, the main purpose of a joint life insurance policy is to financially support your loved ones after you or your spouse passed away. The beneficiaries can use the funds from the policy as an inheritance to repay debt or to do anything that they would like to. Although joint life policies are most common among spouses, you don't have to be legally married in order to buy coverage. Joint life insurance policies are available to domestic partners as well as business partners as well, as long as you can prove insurable interest like shared assets. So, how does joint life insurance policy work? A joint life policy is one contract covering two lives, like I said, with one premium being paid. So, joint life insurance isn't just for married couples or romantic partners. You might also decide to get joint life insurance if you have a business partner. Having joint life insurance ensures that the surviving business partner can continue to operate or make the appropriate company changes without the other. So now let's talk about the types of joint life insurance policy. The first one is the first to die, while the second one is second to die. Names are funny, but they are very reasonable. So first to die policy. Now with a first to die joint life insurance policy, two people are covered, and when the first person dies, the death benefit is paid to the other person or the named beneficiary. If the living person collects the death benefit, they can use that money for any purpose. When one individual dies, that generally leaves the remaining living partner without coverage. Some insurance companies may allow the living person to convert their joint policy into an individual policy, but the premium might be higher, especially if the original policy was old. There might be a tight window as well, from 30 to 90 days after the death of the first insured, to do the change of contract. Oftentimes, when you are using a policy and after several years you want to make changes to the policy, you tend to pay more, like it will be costly no matter the life insurance policy, be it term life insurance policy or life insurance policy. The cost will be higher because they believe that you are moving closer to your to your grave. So let's say you created a policy like when you were like 30 years or 40 years old, then when you get to 60 years you want to make changes to that policy or you want to renew it or something like that. the price will be higher, way higher for you. So first to die insurance is typically used by young families for income replacement because the surviving spouse is able to collect the death benefit money tax free. The second type of joint life insurance policy is the second to die policy, and it pays the death benefit only when both insured individuals have passed away. This type of policy is often called survivorship insurance. The money is usually left to an estate or the couple's beneficiaries, including children or charitable organizations. This policy is not best suited for people who need an individual death benefit to be paid at their death, regardless of when their spouse or partner passes away. So now let's quickly talk about the advantages of joint life insurance policy, and after which we are going to talk about disadvantages. There are certain situations where joint life insurance might make sense. One reason to buy joint life insurance for married couple is to get affordable coverage. Typically, it is less expensive to get joint life insurance than two individual policies, and it can be a great option if it is the only protection that fits your budget. This type of policy can work for married couples who are only concerned with the beneficial burden of being a single income household or taking care of needs after the surviving partner passes away. However, be aware that in exchange for a potentially cheaper price, you'll be taking on a greater risk. This strategy can backfire if one of the insured dies and leaves the other without coverage. Another scenario where it might make sense is when one partner is not as healthy as they once were. If the other spouse or partner is healthy, the insurance coverage or the insurance company may still provide the coverage to the less healthy person, since the death benefit in a second to die policy is only paid once at the time the second insured dies. So now let's quickly talk about disadvantages, as you must have been thinking about, because that's a lot of disadvantages. A lot of insurance experts don't advise buying joint life insurance policy, and it's not even common, like it's dying out. So disadvantages, why joint life insurance can offer benefits in certain cases. It comes with complications and downsides that lead some financial experts to recommend avoiding it. It is in my opinion that each person should apply for their own individual policy, so none of the pitfalls of joint policy are realized. One of the biggest disadvantages to a joint life policy is losing coverage after the first person dies. If you can't keep the policy and the carrier doesn't offer a conversion option, you may have difficulty purchasing a new policy, especially if you had a chance or a change of health over the years. Divorce can also complicate matters. If married couples end up divorcing or separating, the other spouse would need to apply for a new policy and prove their insurability before a new contract would be approved and issued. Divorce can also create a separate set of problems if one of the insured does not want to sign off on the other spouse obtaining their own contract. In addition, joint life insurance policies are getting harder and harder to find, and with the premiums of term life insurance policy getting lower every day, almost every year, joint life insurance may not be as cost effective as it used to be. That's the only disadvantage why you should take joint life insurance policy. Like, you will be paying for like maybe 70% of what you pay for two people. That's the only advantage. On the long run, it doesn't really work well. So with that, we have come to the end of this video. Thank you for watching. Please subscribe to this channel and like this video. Bye bye.